services. I've been using your brand lately. They pantsed them.
Well, I got that from you now.
Well,
now you're saying it back.
things reverberate.
So you just think it was a battle for market share, and they beat them?
Yeah, sometimes it happens. They didn't have the
sometimes
analytics.
the simplest explanation is the correct one.
Yep, and that's what happened. But Alphabet's going up because people realize, despite what they seem to not know, is that YouTube is doing incredibly well.
Yeah, YouTube is a dominant platform.
Right, and David, Disney reports tomorrow. Why not bring up Disney?
Good morning, everyone.
These are companies that they should be looking at.
How is everyone doing today?
How well YouTube's doing with the NFL? Can you imagine spending like billions and not even know?
Right. Well,
They were jammed.
There is an interesting
Good
question.
show
Not
at
even
the
question.
double top. Nice,
concept
awesome,
of
good, happy to hear.
difficulties
So yes, you are correct. NQ has formed a double top on a 15-minute, 1-hour time frame. So this is looking really good for a potential
Carl, we have two classes of companies. We have these companies that
for a potential drop.
they have an
Let's see. Would love.
by the way, look at Apple with the stock. It turns out that service is really great.
All right, so let's go through everything. So 1-hour time frame, NQ has hit a double top. Stochastic overbought, RSI not so much, but I'm liking the fact that it's still holding below yesterday's high. This is a good sign. Right now, Nasdaq is the only one in positive territory in comparison to ES. Right, so ES, not quite the double top, but it is formed a lower high. Beautiful. Still waiting patiently to see ES break and close below 43.60 for the continuation to the downside. And then we have Dow Jones. Dow Jones has been rejecting below the Asian high, which is a really good sign. Dow Jones, we need to see Dow Jones break below and close below 34,000 for continuation to the downside. So today, hopefully we get a little bit more action and volume in comparison to the last few days, at least specifically yesterday.
And I still think that the Vision Pro, that people don't realize that it is a B2B situation. There are companies that are going to use it, and they're going to use it. And then yesterday, my wife goes like this.
Let me let everyone know. I'm tempted to actually start scaling into ES via the micros.
She goes, I mean, shut up. I said, Tim Cook told me, man, like you can change it.
Can I try? All right, that's the only time. Wow. That's only time 11. Don't tell the booth because they'll be doing it too. I know. Right? That's all it takes. All these years, all I had to do is this.
You have to go back.
We got to get it. Oh, we got it. Jim, when it comes to China, 19% of revenue is obviously very important. Can you believe anything you hear during the course of a quarter?
No, you can't. And the reason why you can't is because the Chinese are so opaque. But we know this. Lines to get in stores. But what matters more than anything else is super fast fashion. Have you noticed this? Between these two companies, fast fashion companies?
What, you're talking Shein again?
Yeah.
Which we seem to be on a mission to publicize this private company that somehow we have on air all the time.
Well, from what I can tell about Shein is that you wear the stuff like for breakfast and then you throw it away.
Like disposable clothes?
Yeah,
I don't want you to believe that that is really the case, but apparently it may be.
Well, do you know that, I mean, we shouldn't we be talking about how TikTok has infected the world, or is that?
Sure, do you want to spend time talking about that? I'm happy to. It's also, by the way, taken an enormous amount of ad dollars.
Well, I
mean, again, back to media, which we tend to come back to.
Look, I am going to wish him. I am going to wish him
incredible.
Hurry back. Here it goes.
But hurry back. A private company with an enormous market value, or not market value, with enormous value.
Let's see. Right now, I'm not in any positions. I would like to see a pop to 43, 81, 82 to start scaling in short on ES.
us because we tend to be, if you're in government, you got to be an octogenarian. You're either Sunrise Senior Living or you're in the government. And our government doesn't seem to realize what's really happening.
Some do. And by the way,
Dance and TikTok are much more important than
if we were to ban TikTok, do you think that would actually solve a lot of those issues?
But definitely still looking for, just like yesterday, going to be looking for shorts on the market. So that's ES, NASDAQ, NASDAQ again, double top. So we're going to see what happens at 9:30. Oil has been completely demolished. I'm also watching natural gas because natural gas gapped down the other day, and I'm looking for this to head back up so to fill this gap. So I'm going to be watching and probably see how it holds off later in the day. Tomorrow we have Wednesday we have crude and natural gas supply data that comes out. So just gonna patiently wait. Let's take a look at Tesla. Tesla, if it can't hold above 220, we could see a potential unwind all the way back down to 202. That's based off the 1 hour time frame. Nvidia, massive bounce and run up on Nvidia. I mean, broke out, boom, retest, and just kept on pushing. So Nvidia, I would love to see a potential pullback to 440 for a potential long. Apple's just been on a tear nonstop. Meta as well. Microsoft has been beasting. AMD. So AMD levels I would like to see on AMD for a pullback. So let's take a look. AMD 108, and then we have
everything about our country is bad and everybody else is bad except for the people who are in league with the Chinese, but we don't get to know that. The axis of evil. Where's Reagan? There's an axis of evil, but I'm actually talking about this stuff. I can't believe You're concerned. Yeah, that's about it. I'm concerned. I can't get my kids to be off. My kids are not real. So
what does that have to do with the price of Apple? Really, you think so? There's plenty of people who disagree with you.
Well, they've been wrong so far. I've been saying
okay, so levels I'll be watching for on AMD. My volume seems very low. Oh, yes, it is. How about now? Testing 1, 2, 3. Yeah, it was low. Thank you. So yeah, so right now just gonna wait and see what 9:30 brings, and just gonna see if we break below yesterday's low, and then a retest of it would be a confirmation short. But right now this is looking really good where I am seriously tempted to start scaling in, but I'll patiently wait.
It's kind of like Fredonia. Stick up the taxes. Hail Fredonia, David. Come on, hail Fredonia. Right from prison. I've been following the Fredonian elections.
Have you?
Right from prison.
You and Margaret Dumont.
Oh, I loved her in that. Oh my God, was she great?
When we come back, we'll talk some autos. Got a new report card on used car sales, the demand picture for EVs. Kind of a tough piece in the journal this morning talking about pricing coming down and waning demand. We'll get to Datadog, Horton, Uber, Planet Fitness, and a lot more in a minute.
There is a blue flag on the ES 4 hour time frame. Yeah, kinda. Uh,
Sales data for October moments ago. Let's get to Phil LeBeau with the results. Hey, Phil.
all right, all
Hey,
right,
Carl,
all
what we're seeing
right.
in the used car market is what people are referring to as a more normalized market. So this data, which we just got a few minutes ago, from
Possibly, yeah. It could do one more pop and
which is the
then
used car market
reverse.
or the index as well. Prices
But
in
let's see.
October down 4% compared to October a year ago, down 2.3% compared to September. Remember, in August and September, they ticked a little bit higher. And all segment prices, whether you're talking trucks, SUVs, sedans, what sedans are still out there, all of the prices dropped in the month. And for used car demand overall, what they're noticing is a slowdown, not a huge one, but a slowdown in demand. And we typically see that in late September, early October, and then things kind of adjust a little bit and move a little bit higher in October and November. So don't be surprised if we see a little bit of firming on prices. But overall, you can look at this report as you take a look at the auto dealer stocks, and you can say, okay, we're getting a more normalized market. The uptick in prices in August and September, a lot of people thought we'd see such a drop off in production because of the UAW strike that people would say, well, I can't buy new, I'm going to buy used. We still have plenty of supply of new vehicles out there. So that's a little bit of the give back that we're seeing in October.
Vehicles, Phil, the Journal with this piece about something we've been talking about for a while, and that is EV makers turning to discounts and incentives to combat what they're calling waning demand.
Yeah, I think what we're seeing right now is the red hot demand that was there in EVs, that's gone. We're just not seeing that anymore. Now, EV sales are still growing. Don't mistake this for people are turning their back completely and they're not buying EVs. It's just that the automakers are going to have to work harder. And also keep this in mind, guys. There are more models of electric vehicles that have been introduced that are out on the market. So in the past, you may have had 4 or 5 competitors if you were an automaker and you offered a particular model. Not the case anymore. It's becoming much more difficult for you to break through with somebody looking to buy an electric vehicle.
You know, Phil, got some really quizzical comments from Stephen Sherr last week from Hertz, who basically just saying these things are too hard to repair. These EVs,
Let me
it's a real
see.
cost.
And
And
keep
really hurt them
breaking the
depreciating much more
downtrend.
than
The
I thought.
more
First, that they
immediate
weren't supposed to
one.
be depreciating. And second, that they were
Another
easy to
pop.
fix.
There we
So
go.
most
Pop
really
on just
Well,
before the
look, they have a
open.
lot of Teslas, and one of the big knocks on Tesla has been and continues to be that when there are issues, when they're needing when they need repairs, how do you get them repaired? Tesla doesn't have this dealer network. Yes, they have service centers, if you want to call them that are sprinkled across the country, and they continue to add more. But it's not the same as having the Ford dealer network or the GM dealer network, any of the automakers, traditional automakers, and that's what Hertz is dealing with to a certain extent. It's a Tesla-specific issue there in terms of, okay, well, we got to get it fixed, and it's not like you can turn to the dealer down the road and say, fix this, please.
Phil, back to this larger issue. Again, we understand there's still growth, but of perhaps waning demand to some extent. To what do we attribute it? I mean, prices are becoming so much closer between ICE and EV. Is it more that early adapters are done and people don't want the lack of availability of charging stations? I don't know. I'm curious. What do you see as the gating issue?
I think you hit on David, I think you hit on a couple of important points there. One of them being that the early adopters, not that they're gone, but you're now getting into more of the slower mainstream growth. People who may have 2 cars, and they might say, okay, is it time to go electric with one of them? That's more where we're at in this market as opposed to before, where people are like, hey, man, my next car is going electric.
Jeez.
Whether, I'm doing it. And the other issue that you bring up is the charging. I talked to a number of people who are like, yeah, if I've got 2 cars, I'm happy getting an electric. But I wouldn't go electric with just 1 car because if I have to drive long distances, who knows how easy it will be to charge. And finally, this point, David, the pricing still remains overall in that above 50,000 range. It's not like you can go out and say, I want an EV right now for under 40,000. Are there some out there? Yes.
Jeez
Relative
Louise.
to internal combustion engine vehicles. That's got to change. And that's where the discounting comes in right now,
Bruh.
where you can say to people, look, we can make this on a level, apples to apples, we can bring it a little bit closer together.
Hey, finally, Phil, Jonas has a note out over at Morgan Stanley talking about what Tesla needs to do to avoid a leg lower in the stock. Basically,
All right. Nice pop. Nice pop. Yep, just gotta be patient, man.
markets or AI.
I think AI is probably the more interesting option that they have there. And in terms of new markets, yes, we've heard them talk about licensing, in terms of licensing their autonomous
Papa for the
vehicle
open.
technology
Let's
to some
see.
of the smaller internal combustion engine vehicle companies. I'm not sure how much that's going to move the needle. And
Let's see if it'll hold below the week's high of 43.91.
and nobody's expecting huge numbers. But have a clean launch. A clean launch. That is critical. Whether it's a small number, as long as it's clean. It's you can't have one of these things where
A little late to be bullish because look it's running up on very low volume.
you've got to show that there's just going to be a nice steady progression.
See right here, very low volume on this run up. But let's see.
We'll get Kramer's Mad Dash and countdown to the opening bell on this Tuesday. Futures again looking pretty strong on the Nasdaq, and that's actually.
I'm a big believer of some days not making money is better than losing money. The way this market, like where it's at right now, and again, given the fact that we have this gap down here to fill, I'm very iffy on taking longs. We just have to patiently wait for our entries and opportunities. Yo, what it do? Chilling, man, chilling. Facts. Bruh. Shit, 5? Mm-hmm. Shit. You must have been in heavy, huh?
CNBC. Jim mentioned Datadog earlier on, going to open up about 25% here as they beat and guide above for the quarter and the fiscal year. Revenue up 25, followed by Global Foundries. Bunch of sales beats today, including Planet Fitness and Trip. We'll get to all of them. And the opening bell in just about 6 minutes.
Yeah.
You can catch us anytime, anywhere. Just listen to
back.
follow.
Make that back.
On the Street Opening Bell podcast.
Mm-hmm. You got it fixed yesterday? What because what is it for you to do to get the ACH transfer? Yeah, because if Yeah, because if your IP address shows, that like you're in another country, out of the US, the payment is Wheeze. It's via Wheeze. So yeah, so if you initiate that and it's like, okay, well, they can see your IP address, and which in most cases what you should do is you should get is it a VPN? VPN? Is it a VPN? Yeah, I have CyberGhost, so I use CyberGhost on my laptop, my iPad, and I have it on my phone. So like when I'm in certain places where I want to make it look like I'm in the US, I go on to the app, I turn it on first, and then I make it look like if I'm in the US, if like I'm South American, I want to make it look like I'm in the US. I'll turn it on. I'll select the US server, and then it'll show that I'm here. I did that in Dubai because in Dubai, like you can't do video calls. Like I couldn't FaceTime. I couldn't use Google Do. So I had to. Yeah, yeah, bro. Yeah, in Dubai you can't do video calls. So in order for you to do that, you have to have a VPN where you can make it look like you're elsewhere. And I would turn it on, and once I turn it on, I was able to do FaceTime. Mm-hmm. Yeah. Mm-hmm. Yeah, yeah, yeah. So you got your withdrawal. Nice, nice, nice. Yeah, yeah. You know what I mean? It's like, whoa, they're about to send money to someone overseas, and then it's like, yeah. Mm-hmm. Mm-hmm. Yeah, yeah.
All right, 3 minutes to get to an
Yeah,
opening
no,
bell.
I didn't have to
See
do all of that because anytime I submit requests, like I do it from the same computer, from the same device that I'm doing trades. You know what I mean?
Look, Yield's 2.8. It's one of the
Yeah,
greatest
so I don't
companies
have
ever.
that.
It's
I don't.
18 times earnings. And yet, the number of notes are coming out ahead of when they were on the 14th, indicating that it'll probably be a shortfall. Here's we got a price cut from Chelsea Advisory, you got a price cut from Citi, price cut from Barclays, sector perform initiation, RBC, David. You're not supposed to initiate them from
No.
so this is a
I mean, look,
basic
look at what
concept.
happened. Like what's
I know
happening
that
to
there
oil,
is
bro. Just
reduced spend level. We
demolished.
keep hearing that people want to spend service. I know Sonos got a downgrade today. I know that a lot of
With
chatter
all this
here
stuff,
for
with all this stuff going on, it's like, yo, they played some serious games.
there's not a lot of change in the housing market. You need to have turnover in order to be able to redo and rebuild and refurbish. So anyway, long knives around. Plus, of course, I know you focus on the short, which is
Two
terrible.
point down 2 points today. Like literally all weeks, it's just been nonstop selling off.
Let's get closer. Because if I say give me pause and the stock goes to 280, whatever, I think you have to buy it. They do have a thin problem. We know
Weekend was pretty chill, man. I just did some reading, charting, went over some contracts, filled out some W-9s and stuff like that. But yeah, I just been focused like just gym. If I'm not like gym and charting and doing back end stuff, for the prop, I'm resting, bro. It's like it's getting cold, which I'm happy for, cause like now nobody's like, yo, let's do this, let's do that. It's like nah, and even if they do, it's like I'm just focused, man. I'm just locked in, and especially like after coming back from Zanzibar, bro. I'm just like, yo, I'm gonna feel like I need to grind, because like the movements that happen in the market that I missed. Yeah, I mean I caught some trades, but I'm trading off of my phone, so it's not the same,
the person was not even willing to contemplate.
Yeah.
Not sure that that would be possible, but
Yes, sir.
No, but foreign
Bro.
we banned some
Yeah, yo, it got so close to it. It's like literally 10 cents away from the 50 even. And then a nice little pop, bro. I'm so sick that I didn't hold my 49.30 30 buys. Bro, two and a half points pop. I'm like, let's take a look. Okay. NQ new high. ES so far still lagging. Dow Jones as well, still down. What do y'all want to do? What do y'all want to do?
It's going for 8 straight gains
Yeah.
today. If it gets that done, Jim, longest win streak for the Nats in 2 years.
Okay, nice pullback so far. Another rejection on ES at 43.84. Okay, oh, go on with your bad self. No entries yet on ES. I'm still waiting patiently. Still waiting.
We mentioned Uber earlier today. 10 cents does miss 12. Revenue was shy, but up 11. The adjusted EBITDA beat. Pretty good guidance on gross bookings, Jim.
Yeah, I think that it's down $1 shouldn't be. I mean, I thought that
Yeah,
like every
she
ball,
looking.
sometimes you get this
Nice.
initial reaction, and it's just probably, I think, going to be.
I'm gonna set a sell limit on ES at 43.82. One contract I'm gonna risk to the high of the day, which so far is 43.85. Just testing it out the water. So.
David DoorDash had an amazing quarter, goes up and then goes down, and now coming back. Airbnb, I think, good quarter. By the way, you guys had Peter Kern on yesterday. That's a great.
You short or long?
Trip this morning, right?
Yes.
Trip was up 10% pre-market.
Looks good. Looks good.
But the death of it was greatly exaggerated. I think, David, people still are traveling.
Still got my buy at 50 even on ZL.
They're still staying home to work. And I still see commercial real estate.
That will continue for quite some time.
Ooh, okay, ES. Oh, NQ, ladies and gentlemen, taking a short on NQ. Let's see, NQ.
You're also facing the pressure from far higher rates if you have to refinance.
Order filled. All right, I'm short NQ at 15,257. I'm gonna risk 40 points on this trade.
Fixed rate right now, but yeah, it's got to be a continued concern. It's one we'll talk about for years to come. Jim, I'd love to come back to you. You mentioned Datadog a couple of times, but we really haven't done the numbers. So let's take a look at Datadog. Let's talk a little about the quarter and why Snowflake is a beneficiary as well.
Because Snowflake's really good.
Let's go. Oh, beautiful. Damn. Let's go. TP is going to be the low of the morning, which is 15,176. So essentially, I'm going to be risking till about the high of the day. Not bad, not bad. Let's go. Oh, can we get a massive unwind?
We still care about enterprise software that analyzes data. And if we do, then we can care about a lot of other companies. We can care about everything from Adobe, Salesforce, to ServiceNow, to Snowflake. You kind of like hip bone connected to the knee bone. I think
so. The move up in Snow is directly related to the data.
Oh, let's go NQ. Yes, baby. Beautiful. Okay. Ooh. I'm going to move my stop loss to break even. Ladies and gentlemen, moving my stop loss to break even on NQ. I'm not playing games today. Stick and move. Stick and move. Let's go. Oh, yes. Keep it going. Maybe I should put my stop loss slightly in profit. I'm going to put my stop loss 7 points in profit. So my stop loss is going to be 15,250. If it drops another 10 points, I'll move it down to 15,245. At least I'll walk away with a little over 10 points. So it'll be like a nice 2K win. Let's go. Go, baby. Go, baby. Oh, yes, yes, yes.
But again, we have a reset. These guys all went down big. stay off Texas Instruments NXP went down because they're both Internet of Things and auto. But NXP has clearly got a better handle on things. They're getting more
Oh,
into
don't stop
each
me out.
auto.
Don't stop me out.
That's a remarkable company. Don't forget they also do mobile near field communications. So it was a big win, and that will help a lot of the semis. All these companies just are waiting to go higher. Like David, ServiceNow. I know that we may think that ServiceNow is kind of like ethereal in what they provide. They're winning. And every time I say they're winning, the stock goes higher.
How much of this is a beneficiary? I mean, obviously, he was here, McDermott, not long ago, talking about AI. When we're talking Datadog, or we're talking Snowflake,
Should I take this
how
20
much is this
points?
related to the
I'm
AI?
tempted.
Let's call it rollout.
And
By the way, guys,
I don't think Snowflake has as much AI as we think.
you don't.
No.
Okay. Providing a bit of a tailwind.
Yes, exactly right.
GPT-4 Turbo. You know, if you like your GPT with a turbo, now you can get it. It now provides answers with context up to April of 2023.
There you go. Keep it going, baby.
And so-
Keep it going.
Well, there you go. You wouldn't have been able to previously. You only could get answers as of the end of well, basically January 2022, end of 21.
Thank you, bro.
GPT being smarter.
Thank you.
Yes, GPT-4
Okay, so-
has now added a turbo version.
A friend of mine, Frank Wright.
You need to
the
continue
coach of
following
the
through.
Panthers. His daughter used to be.
Like, don't play with me today. Don't play with me. Yes, yes, yes. Oh, there we go. You know what, man?
Get this, David. You will just be a Clark.
Order filled.
Taking profits. Taking profits on NQ. A little over 30 points. I'll take that. I'll look to rescale back in short on NQ, but I just locked in a little over 30
I
points.
didn't realize you guys were friends.
Okay, to start the morning. Not too bad.
Say I start drawing up plays.
Well, I know.
Not too
But
bad.
there's a lot of teams that could use a few AI plays.
Alright, with 10 contracts. My guy, that's what I'm talking about. Ooh, let's go. Okay, I love it. 7,800 on the day, 12K over here. Let's go. Early. Ooh, oh my god. I just need ES to finally break 4360, man, and it's a wrap.
Glad you mentioned
Carl, let's talk actually about Empress for a
And
moment.
NQ, nice little pop.
Company you had followed certainly through the
I'm
years.
shocked at how. No, I'm not shocked. They just keep screwing up.
Shares of Emerson are down.
It's unbelievable.
There it
They
is.
just miss.
Over 8%.
No,
Fourth quarter earnings. Yeah, $1.22 is what I think I've got here.
I just keep thinking it can't be this bad.
Yeah. Adjusted, yeah, just not what obviously investors have been looking for. Revenue up 5%, missed analyst estimates a bit as well. Expect adjusted earnings from $1 to $1.05 a share. Let's call it instead of analyst estimates. Yeah.
We sold some of this very high. You know, we're stuck with a little piece of this.
Looking for some things here. So destroyed.
Yes. Oh, she going. Oh.
Again, we sold some higher. We're still stuck with some. Little parts by is putting together a brand new company. It's supposed to be like a software company for the grid. And right now, it's nothing. That acquisition, which remember they made.
Yes, I do remember that. Yes.
Ill-advised.
Wow, I hadn't realized what a downtrend that stock has been in.
You know, this was a great American company, and now
It really was? Given it was a great American company?
At one point, it held the record for the longest streak of earnings beats.
well, David Farr. A lot of people feel that David Farr in the end was a little bit too statesmanlike. I think David Farr worked very well with a fellow from Paul Weiss that you're quite aware of. Scott Barchet,
Yes.
get us some deals.
Yes.
I think
They did.
Barchet is a
They fought some activists along the way as well. D.E. Shaw came after them at one point.
Let's go.
Well, we need an
I'm gonna
activist right now.
continue.
Wow, already calling for an activist.
Well, it's just such a mess. I mean, I've been very anti their strategy. I got stuck in some. I didn't like that. You know, they went hostile. David, I don't think there's any room for hostile deals anymore. That was. Yeah. What am I going to say? They're doing great. It's time to load the truck up. The turnip truck.
We're talking earnings for fiscal year 24 of now between 515 and 535 a share.
That's actually not bad.
That can give you a sense.
That's
of
actually not bad.
multiple.
But that's not bad. I mean, that's better than what people thought. That's why I didn't think it would be down 8. I had it down 4 in my book. I mean, down. I didn't think it would be down 8.
Oh, the Russell 2000. Yeah, the Russell 2000 definitely can be a lot easier to trade. It doesn't move as crazy as ES, Nasdaq, and Dow.
Jim, you mentioned FANG, one of the worst performers on the index. Oil 2-month low, nat gas 2-year low, gasoline lows of the year.
It is rather amazing. Yet Coterra was up because their cost for natural gas is so low they can still make money. Carl, I think that
Are we
let's
gonna get
consider the
another one?
bull market. Well, if you listen to CNH, that's over. Deer's coming down. When you think about the used car market, which was again something that was very inflated, that's really coming down. We heard that from Phil LeBeau. When you think about oil and gas, they were big parts of what was inflation,
Do we
and that's
enter
coming
again?
down. So I ask you, how can you stay as bearish about what inflation's doing in this country in light of the fact that all of those, and let me throw in rents, which are coming down.
I was going to add rent because piece on the wire this morning about rent deflation in Austin, in Atlanta, in Boise, because of the new apartments that are finally coming online.
You know, I think all you have to do is look around here in New York at the unrented apartments. Go to the Kiwanis Canal, also known as Venice.
Not sure you're looking in the right places there, Jim. I think
No,
we've got some sort of, we're like 99%. There is not a lot available in New York City.
David,
right
I need
now.
you to go to the Kiwanis Canal, which I know you don't even know. Right now, I think it's got blue bubbles.
I'm
Last
aware of
week
the Kiwanis.
they had a
Used to play stickball, right?
You know, not
Okay,
far away.
there's a
There
lot
was
of
a
apartments that have
Is
been put up that are
ES
being put up
gonna
right now.
continue
Kiwanis.
down?
They're rented.
Order filled. Scaling in one contract on ES. 43.7550 is my entry. I'm leaving room to add if it comes back up to 43.82.
As well, Jim, but I don't think they have anything to do with what's going on right now in New York City in terms of the realm.
David doesn't see it coming. I've got a gun that shoots around the corner, pal.
You do.
Yes, I do.
All right.
So,
And rental's coming down.
so when Goolsby this morning says we might be looking at the fastest drop in inflation year on year ever,
I've always been a believer in Goolsby. He's, you know, it's funny. Goolsby comes on TV a lot, which usually means that you're probably a hack. But that's not the case with him. He's like a serious practitioner of the game. I don't know if we even have sound
Thank you.
for him,
Right
but
back up.
Goolsby comes
Do
on,
we
I say,
dare
"You know, he does
re-enter?
a lot of homework. He does homework." Dave is a homework-oriented fella.
I like that.
You like that too?
Yes, I do. Yes, I do.
And you hate Emerson because they don't do anything.
You're very upset with Emerson. You weren't even going to bring them up until I take
Scaling into ES shorts. In ES shorts, one contract at 43.7550, and I have a ad at 43.82. Now, if we start breaking down, I'll add to it.
Goldman's fine. It's fine. The big banks are they're under pressure from the capital rules. I don't know if you saw this interesting journal story about, you know, hedge funds and buyers of synthetic. Basically, they're buying 10% of their risk to take, so they can actually take less.
Pretty much just risking a portion of this morning's gains on NQ.
In some ways, I mean, many will argue with that statement, say that
You got to be careful, David, because you're
know.
starting to trend on the idea that rich people deserve a little bit of a break in this country. I have
the
to talk
Basel
to you.
endgame is not ending that well for them.
Well, you just got big bonuses at Goldman if you're a hitter. See that?
No, I didn't.
Yeah.
Apex is the wave, ladies and gentlemen. You cannot go wrong with Apex, man. Especially the fact that you can have up to 20 accounts. 20. All right. I like, was it? The other best one I would say after them would be Take Profit Trader, which Take Profit Trader, the upside with them is that you can withdraw daily, but you're limited to 3 accounts. So maximum, I believe, was it 1, 2, 3? Maximum you can get funded with Take Profit Trader is 450K. Whereas with Apex, the max is 6 mil. So, you pick and choose. Do you want to only get funded, 450K, or do you want to be able to have the option to get funded up to 6 million?
But this is not like Sean Fahey. But Sean Fahey was running rings around these guys, right? That's not like that. Sean Fahey, from the UAW came in.
You're welcome, man. Yeah, absolutely. Listen, I'm a big fan of once you've made your gains, call it a day, man. I'd love to have you guys continue staying on here, but I want you guys to practice taking your money and dipping. That's it. There's no need to continue being here. Just take your money. If you hit your goal, dip. Go do something else. Go work out. Go, I don't know, read a book, meditate, stretch, eat some food, whatever. Hang out with your lady if you have a lady at home. You know what I mean?
Yeah, thanks.
I mean, they got their business to worry about. If you're Disney, watch Warner Brothers Discovery. You got to worry about activist investors. So you got to worry about who knows, a million things. You can't just spend 6 hours every day.
Okay, so should David Zaslav, who reports this week, be concerned about the strike?
Nope.
Concerned about the strike. How about I get it over with?
Facts. With 20 accounts, you don't. You could literally make, shoot to make $300-400 per account, and that adds up really quick. Like if you're doing, let's say $300 a day on 50K accounts, right? You multiply that by 20, that's a nice 6K.
I think that's right. I think that Disney, we want a little.
And when you do the payouts, the payouts are per account.
Disney. We want a data dog.
Yeah.
God, I hate my accent so much. Jesus, get rid of it. When I was in Philadelphia this week, I'm like at the game. I said, these people all talk like awful.
How about your Planet Fitness gym? I know you've been constructive on it.
I think
Paying off today.
I think what people don't realize, and this is going to be revelatory to David, but not to you, Carl, because I think you're more of a follower of current trends and data, is that when you take these weight loss things and stuff, you have to work out. Because otherwise you atrophy and you wither away. And people don't realize that's why I thought Lifetime Fitness handled my interview with them very poorly. Because all they had to do was say, every doctor says if you take these drugs, you must work out much more. But no, he punted and talked about sale leaseback. You talk about sale leaseback, you talk about push-ups.
Tops up almost 9, mostly because of new members.
Yeah.
Store count goes to 2,500.
It was a good quarter. Well, I think the stock had been down a lot because it was one of those disappearing CEOs. Like, hey, who's the CEO? I don't know. You are. It's kind of like when you go upriver in Apocalypse Now. Who's your commanding officer? I don't know. You are.
Yeah. Those are great scenes.
Isn't that great?
Great. All of those are great scenes. On the
They are
boat,
great.
Just gets deeper and deeper up in
Yeah.
until they finally find Brando somewhere in his cave.
The blue bus. Right? Little Jim Morrison at the beginning. How can you not like that?
Duval. No, that was Pac. Yeah. Duval. Surf. Yeah.
No,
500K accounts or
he was the very
All right, so the advantages of 500K accounts is that you can trade them individually, versus I don't know many firms that are giving you like a straight out 500K in one account. It's usually multiple accounts, or like 2 accounts. And the benefits of having 5 different ones is that you can trade them individually, but realistically it would be the same as far as trading a solid 500K account where you can scale in and scale out. So not really much of a difference depending on what the firm's do's and don'ts, what's their drawdown limit, do they have a trailing drawdown. But yeah, another thing about it is the psychological aspect of it. There are traders that, seeing $60,000-80,000 drawdown, they're not quite ready to see that mentally, right? So if they trade a 100K account, but several with like several other ones linked together, it's much easier for them to cope with the with the drawdowns, with the P&L fluctuation. Like I know some traders that they can't trade with a 200K account. So what they do is they're comfortable trading 500K account, a 50K account, and because they're more comfortable trading a 50K account, they will then link that 50K account to a 100K account or a 200K account. So whatever they do on the 50K gets copied on the 100, 200K, but like at a 2x multiple. And then they're able to, gain and manage that much better. Okay. ES still playing. Yeah. Okay. Okay. So close to my ad on ES. I'm gonna switch it to 80 even. Come on. Let's see. Okay. Can we trade multiple accounts? With my firm, yes. So maximum you can do is 200K accounts. But you can link those 200K accounts together, or you can do four 100K accounts. You can group those together. The thing with forex firms is that for you to group them together, you have to use an external copy trade software, like Forex Solution or Social Trader. I think it's like Social Trader Tools, or is another copy trade software where you can have a master account, and then you can link other accounts to it. Apex, Tradeovate is the only platform that actually allows you to link that has a copy trade system in-house. Like if you were to do Apex Rhythmic, with Rhythmic you would have to purchase an external third-party copy trade software to be able to group your accounts together. Man, I know my stuff, man. I've been around the block up more than once. So for me, the copy trade that I use is Social Tools. Let me make sure I'm giving you guys the right one. Yeah, so it's called Social Trader Tools. That's the one that I use. I've used Forex Solutions before. But Forex Solutions, when it comes to execution, there's a difference between the master account and the other accounts that are copied. Whereas with Forex Solution, with Social Trader Tools, so you go to socialtradertools.com, and that is a copy trade software where you can have a master account and then you can have other accounts linked to it. And when you execute a trade on across different firms, so like I have 2 different firms that I use on the Forex side, and I can have them all linked together. Forex Solutions, they don't copy the same entries, like they're off. So for you to get like exact entries across all the different Forex accounts that you're going to be copying onto, socialtradertools.com is the best one. So I'll type it up in the chat so you guys can. That's the one if you're gonna be linking multiple Forex accounts. Damn, NASDAQ. Okay, sheesh. Nas with the. She playing. Oh, nice pop. Not bad. Okay, okay. Ooh, even with this pop, be careful. All right. For futures, I'm using Tradovate. Tradovate has an in-house copy trade where I can create multiple different groups, or I can group every account together. So if you're going to do it via futures, I recommend whatever platform that you're using, whether it be Apex, whether it be Take Profit, Top Step, select Tradovate. Tradovate has an in-house copy trade where the entries are the same all across the board. The one I use it for. Yeah, so you can go, so on Tradovate, what you do is right at the top where you see your account, you can select, do the drop down, and then you go to manage groups, and you can create a group. You can create a group and name it however you want, and then you can link accounts into that group. Yeah.
You know, there's a couple companies that are really struggling. And one is, I understand what the defense companies are doing, making fortunes from getting back
You can. So what you want to do is you want to select the little plus sign on the upper left hand corner, and you select accounts. That'll show you each account that you have, so you can see that the P&L individually. I'll take a picture and show you. Let me see. Come on, give me the film. ZL. Yep. Yep. Mm-hmm. Yep. Ah, bro, that's the shit I hate about swinging, man. Mm-hmm. Alright, like you could hold, but that should have come right back to your entries. Like, yo, if you take some profits, you can just re-add. Yeah, but yeah, I hope it gives that 50 even, man. Adding to my ES short. Oh, oh, new high for the day. Yep. Minus 19. Crazy. All right. Damn, bro. Playing that game again. Mm-hmm. Yeah.
Good Tuesday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Gintimia and David Faber live for you, as always, from this side of the New York Stock Exchange. Take a look at stocks here in the early action. We just got positive on the Dow, racing a little mini sell-off at the open of 3 points. The S&P also unchanged. Seeing whether the strength from last week can continue. The Nasdaq, though, going strong as tech outperforms. It's up 0.5%. Number of sectors on the move as well. To point out to you again, information technology has been strong. This comes after a more than 6% gain for the Nasdaq last week. Just want to show you the action here. There's the Dow, positive and negative, and then Treasuries. We check on Treasuries as well. We have seen a little bit firmer yields in the last 24 hours or so. 4.6 is your yield, though. So bond rally is back on this morning. The 30-year yield 4.75. We get a refunding 10-year auction tomorrow that everybody's looking for signs of demand. We're 30 minutes here into the trading session. Here are three big movers we're watching. Datadog shares are surging after the strong results from the software company. Revenue up 25% from last year. Guidance also beating estimates. International flavors and fragrances moving higher, topping revenue expectations thanks to higher pricing for food ingredients and fragrances, as well as falling raw material costs. The company also confirming it will continue to work with activist investor Carl Icahn, agreeing to renominate one Icahn director to that board. And then finally, first now in the green and up nicely on the year. Revenue comes in line, but the company did see a surge in gross bookings, up 21% from last year. We're going to break things down with one analyst forecasting.
Nah, that's why I was like, when it did that drop, I'm like, I probably should just take that 30 points, 30 plus points, because the way they've been playing lately, dude, like.
Because there was some anticipation going in, and we only get it quarterly, and that's the SLOOS, the Senior Loan Officer Survey. Came in. People were looking at this to see, since the regional bank crisis, we were worried about a credit crunch, right? The tightening. And as you can see, and this is just a look at commercial and industrial loans. So banks loaning out to other business in the economy, conditions are tight, and they have been tightening. As you can see, we're near recession levels. The last big spike up there was the COVID recession. Demand for loans also continues to move lower, but the pace of tightening slowed down a little bit. So what does this do to the whole soft landing narrative? I don't think it destroys it, but it is something to be cautious about, and we know the Fed is cautious about it as well. Credit conditionings in our economy remain tight and are tightening.
Yeah, it's hard to lend at a real spread, particularly when you're watching your bond portfolios lose value as well. You got a little more capital potentially. It just doesn't make things easy.
Also, if you're in commercial real estate, even tighter loans.
Commercial real estate, you're not making any loans
Yeah,
at all.
exactly.
I mean, for the most part, that you're just trying to hold on and hope that you're not getting the keys back on what you got.
And we've seen the demand for loans fall from commercial real estate and from other businesses, small and large, as well. So you have that with some of the commentary that we're still getting out of companies and CEOs. I highlighted the TripAdvisor one because, again, strong demand in travel and services from the good CEO there. We continue to see resilient and durable travel intent in our data, driven by the enduring trend of consumers prioritizing travel and experiences over other discretionary spend. Not much of a slowdown in that part of the economy. From Tanger CEO, this is the outlet company, so kind of gives a good read on where consumers are spending within the value chain here on the trends. While discretionary categories were more challenged, the athletic and athleisure categories saw continued gains. Leasing activity remained strong with new retailers and categories entering our channel as we continue to diversify our tenant mix by including the health and beauty category, restaurants, home stores, and more experiential brands, Carl, which kind of gives you a sense of, again, where consumers are spending and where they're not. Discretionary continues to remain challenged, I think is the highlight there.
Nah, I'm short. Right now I have a cost. Yeah, I have a cost average of 43.81. I'm only down 2,100.
A big part of it is about the shift from goods to services, things like travel.
Right, and so the question is, where does that leave us on inflation? Is it enough for the Fed? Are they seeing enough progress, or should you still be worried about inflation in the services sector of the economy? We did hear from Austin Goolsbee, of course, Chicago Fed president. He's a voter this year. He's very dovish. He was on Squawk Box, and here's what he's saying right now about inflation.
We've made a lot of progress, and I think anybody who's saying that
So
we're
please be a
stalling
fake
out on
out.
inflation
Please
or
be a
it hasn't
fake
been
out.
enough
Run.
would do well to remember this fact. that
I'm
we're
up
among the
250
fastest
on
falling
50K
inflation
accounts,
rate
small
in
deals
years
each
in
day.
the last century.
Listen, 250 up 250 on the 50K. That's
a
awesome.
path that looks good.
Base hits, man, will get you to the promised land.
Yeah. Inflation rate went down, it's still above where the target is. Absolutely hammering.
Okay,
That's
nice
what we should be
retrace,
watching.
nice
It's not
retracement.
the priority should not be on GDP
Okay.
growth and geography should be on inflation.
Let's hit
So
NQ.
even he, with the dovish, we've done a lot on inflation, signaling that they don't want to do a lot more. It's recognizing that inflation is still above target, and so there's still potentially more work to do in
Okay,
the
go
higher for
NQ.
longer
Yes, baby.
methodology of the Fed, which is
Just
keeping
filled in
rates,
short
as high as they
NQ
possibly
at
can. Now the market thinks that we're gonna get another
15,296.
June early. That's what we're going to parse through the data in the coming weeks. Remember, we moved from July to June after that jobs report was released on
I
Friday.
think I'm gonna add one more.
That's progress, right?
Let's
Weekly data,
go.
progress.
If we start cutting in June, would that not then be considered higher for longer?
It would be higher for less longer.
Stop will be at the higher day, which is 15,320. So I'm gonna have it at
It's higher for longer as long
15,325.
as it takes until there's more signs that inflation is moving back to the Fed's
See if
target
we
of
can
2%.
add a little
And we're
to
still,
this.
what, 3.7% on core CPI? It's just not there yet. Just in terms of the mood of America around all of this, David, we have this great new poll. It's called a Generation Lab poll that we did with CNBC, where we measured the opinions of more than 1,000 young
Yes,
people,
baby.
18 to
Yes,
34-year-olds in the economy. We're doing it a year before the
Go
election
on.
year, just to get
Go
a sense.
on.
Two stood out to me. One, to your call, to Carl, what you said about home ownership. 86% of them don't own a home, which I thought was a lot of pent-up demand there. Mortgage rates can fall, only 14%. And then
Keep it going,
another one I
keep
picked
it
out, which two
going,
candidates would be the
keep
best
it
for the USA
going.
economy? What do you think young people think?
I'm looking at the results here, so I know the answer.
So the highest numbers go to Donald Trump and Michelle Obama at 37% and 42%. So we asked for two, so they don't add up to 100%, but Joe Biden only coming in with 25%, same as Kamala Harris. And Robert Kennedy Jr. might do better with the economy than Ron DeSantis, according to
Second.
the young people in America. That's where we are.
You know, it comes up a lot with me. I know it does with you as well. Just continue. Even though Treasury rates are down in the 10-year at this point, the fiscal situation, concern about deficits is not going away to that poll as well. Any of these candidates, if they were actually to be president, was going to have to deal with a significantly deteriorating situation.
Well, and also, if the economy is deteriorating, they're going to have to deal with a situation where they can't just go to the playbook and stimulate, and pump money into the economy, because we do have this increasingly dire fiscal situation that did not get fixed during
Apex,
a time
bro.
of full unemployment.
Apex. Almost everyone in
strong
this
GDP
chat
growth. So
has been funded with Apex. Come on, man.
deficits. We're down 6 on the 10-year. 5%.
Apex is the wave.
The auctions, we have a 3-year today, 10-year
Oh shit. Oh, I forgot.
Meantime, let's get the streets to the latest take on the Fed comments and the outlook for the economy. JP Morgan's chief U.S. economist Mike Farley is with us on this Tuesday. Mike, great to see you again. Good morning. Good to see you. I love the title of your report coming out.
He's funded with real prop funding. Oh snap. Let's go. Woo. Ladies and gentlemen, I'm moving my stop loss on NQ to break even. All right, let's get it. Let's get it.
gives you a more representation of which is how we are.
Let's go.
We do think we
No need to let a winning trade go bad.
certainly some of the rest there. Issues around the bank sector.
It's okay. I don't mind the payouts.
Some GDP, which was really quite impressive. It's a bit average.
How do we take what you're saying and then what we're also hearing from other quarters of, say, JP Morgan about the risk of higher for longer, the boiling the frog scenario, things start to break, trade events happen, income, excess savings, the low end, it deteriorates completely, things like that.
Yeah, so I guess we are in the high for longer now. Not looking for that until the first next year, which would be a little bit longer as far as these things go. And certainly in the meantime, we cannot rule out the events that we saw in March. So we are cognizant here that even while we're looking for a soft landing, so far we've had a pretty immaculate disinflation. And going forward, we might not be as level as we have this year. Really strong. That's awesome. You mentioned a pretty historic relation. So we've been pretty lucky this year, but I would take that to the bank for next year.
I think the bigger risk by next year that inflation doesn't come down to target, or that the economy falls out of that.
I would probably take
Oh yeah, no worries. All good. Cutting grass in the. Ooh. Oh, what is? Yo, these reversals stopped out at break even. Yo, these pops, man, so disrespectful. Much.
may take some time, but because they were in the two hands, to unhappy. Certainly, we are a little concerned here that the lack of monetary policy based on the fight next year. At a time when you talked earlier about the fiscal situation, this year is a really big year of deficits. Next year might be slightly less dominated.
I hope so. I hope so. Let's see if it's a fake out. But
Although I wonder, going into an election year, how serious you expect the fiscal conversation to get? I mean, are politicians going to be looking to offer solutions on the savings side, or is that not going to be politically
one second, bro.
saleable? There have been some comments from the street last couple of weeks that maybe the easiest thing to do is just to raise taxes on corporates.
So I really
because we have the
Alright,
platform
alright,
of both
I'm
rides and eats, generally we're doing
I'm
better
back,
than the
I'm
rest of the
back.
competitors in the space. So I think it's a barometer of the economy.
So Uber CEO Derek Khosrow-Shahi, he was a guest on Squawk Box this morning. The stock, bit of a volatile morning. Although if you take a look at the year, well, it's been a very good one. Up over 90%, right around
30
$100
minutes starting
billion
to look like
market
a little
value. Our next guest
reversal.
says the market's disappointment, to the extent there has been any, is not driven by any material comments in the outlook for 24. Joining us, Oppenheimer analyst Jason Helfstein. Price target 68 has a buy. All right, so give me your take on the quarter itself, Jason.
Yeah, the quarter was fine. They beat gross bookings 2%. They beat overall EBITDA street 7%. I mean, that's the two metrics that matter. Remember, this is not a revenue business. As far as the outlook, they're guiding basically in line for gross bookings and then 4% above for cash flows for the fourth quarter. So that's fine. This is a company that historically is kind of sandbagging the margin outlook, and I think people are looking for where margins can go next year, and they're just not telling you that right now.
All right, so what do you think, though?
Well, look, we think it goes high. I mean, the incremental margin this quarter was 9%. They have this kind of 7% long-term target, and yet they're telling you that in October they're at record levels across both mobility and delivery. And so they're telling you that the business is seeing no slowdown, and they're just, particularly delivery. Delivery came in, something like 16% are above our estimate and 20% above the street for mobility profitability. So they are set to meaningfully accelerate profitability next year. They just haven't given you that green light to put it in your model.
Does that mean we have a discussion now about whether they get included in the index and whether there's some kind of chase around that?
Well, one, you have a new CFO who's starting tomorrow. So I think part of why they're holding back is to give him an opportunity to decide, what the guidance should be for next year, how much they should either invest in growth or deliver to the bottom line. And then to your point, that bottom line, that gap earnings is what gets you in the S&P. So depending on who the other companies who might be considered for that opening, it's like how much do they have to step on the gas to drive margin, to drive gap earnings.
Jason, Andrew asked Dara about autonomous this morning, and Dara kind of said it would be 5 to 10 years before that was operable at scale. Does that sort of remove any long-term holy grail thesis, at least when it comes to some of these mobility companies?
I think we're going to continue to get asked by our investor clients who live in San Francisco and can take Waymo to work if it's a threat. But, I think you look at the stock price. I think that was a concern probably, a year or so ago. But I think it's just clear for a lot of factors that it's just going to take time. And even when it comes, there's not going to be enough supply to satisfy all the people who want to ride at the same time. Like right now in San Francisco, if you want to use Waymo, you have to book it in advance. And if you think about the whole pleasure of Uber, it's on demand, and you really put a value in, what's the quickest car that's going to get to me.
Yeah, man, by now we were supposed to have fleets of robot taxis everywhere. I remember talking to Travis Kalanick about it. 2021 he had it by, so I guess we're going to be waiting a lot longer. Jason, thanks for the check-in as always. Appreciate it.
Still ahead, a read on the housing market. Homebuilder D.R. Horton beating estimates and hiking its dividend. Stock's up today. Same time, real estate broker Compass also out with numbers. Stock's off 0.5%. We're going to talk to that company's CEO about the results and what he's seeing when it comes to home buying trends and the consumer. Don't go anywhere.
Getting closer, getting closer. Getting closer. When was that? 6:30. 3, 5. is. Almost there. Almost there. Come on down. This is so this thing better not pop.
Welcome back to Morning Trade Live. I'm Oliver Rennick. Joining me here at the New York Stock Exchange is Mark Lopresti. He's a co-founder at Battle Thin. Mark, great to see you again.
Maybe,
Always
let's
good to see
see.
you, my friend.
We have an interesting situation here. It's like since the 10-year hit 5%, it went straight down. Markets went total risk on.
Right.
Is this like a technical gyration, or do you think we're in the midst of a real comeback?
I think we're definitely seeing a potential setup for the bulls to be in charge between now and the end of the year.
Okay.
Typically, this time of year is good for equities, as we know, looking at how historical the markets have performed. You've got a lot of things like the VIX is cooling off. That yield curve inversion is starting to come down to more acceptable, still inverted, still not good, but starting to cool down a bit. And there's a lot of cash on the sidelines as well. We're seeing actually a 14-month high in cash on the sidelines from institutional investors, as well as family office and ultra high net worth.
Oh, wow.
You've got window dressing season coming up. We've got the tax loss selling basically done, right, for most of the institutional funds. So all of those things seems to, plus we don't have to worry about a JPOW-induced freak out until at least December 13th.
Doesn't seem like it after last week.
Right,
Where do you
right.
get the cash data? Where do you go for that? To figure
JP Morgan and a couple of other banks that we track.
So surveys of the portfolio managers or RIAs or whatever that are
Correct.
in their purview.
Yeah, correct,
Okay.
correct. And look, this is of course that time of year where professional money managers sort of scramble to do what they can to beat the S&P.
Sure.
You've got the cash available for it. You've got relative quiet on the Western Front, notwithstanding Kashkari's rather, one might argue, hawkish statements yesterday. That
If he's the hawk, then is there really a hawk?
yeah, well, that's a great question.
When he says
Right?
I'm not convinced, to your point, I feel like he's on the margin, a little bit more right on the hawk spectrum than what maybe was off the Powell. But if he's as hawkish as it gets among the squad, who else could compete?
Yeah, that's a good question. I mean, look, the reality of it is, though, they're clearly signaling they may not be done, right? Futures market now pricing in the first, I think, meaningful likelihood of a cut not until June.
Right.
We've been saying that for a while now, that we wouldn't see the first cut until at least the end of the second quarter of 2024. That is, of course, playing out. But what the Fed needs to see, Oliver, is sort of sustainability or equilibrium, right, in the economic data that they're looking for. The upcoming PCE and PCI numbers, big shocker, of course, are going to be very important, keeping a keen eye on how that pans out. But the Fed has yet to see indications that this economy, including the labor market, although the jobs numbers we had the other day were in the positive, good news, bad news, but the Fed has yet to see that consistency in a cooling of the economy. And the reality of it is, the resiliency of the American consumer has caught, I think, anybody being honest, completely off guard, certainly myself included.
Well, when you get those kind of random 300,000 plus prints, it makes it hard to tell a story of economy breaking, maybe fraying in some areas, but certainly not breaking. One of the reasons I like to talk to you is because you look at a lot of different things across assets. We were talking about crude oil and the drop in WTI. I don't think as much as people did not have the resilience of the consumer at this point, I think like a short-term call that's gone just as surprising to most investors is WTI as weak as it is right now. What do you make of that?
Yeah, no doubt. I mean, futures trading below where they were before the start of this horrible conflict in the Middle East. And who could have predicted that? And I think most of the traders that we talk to are indicating that is primarily a result of a supply-demand equilibrium right now, right? Now, the issue there is, unfortunately, the conflicts that we have going on, one black swan, and maybe it's not even a black swan given what's happening, maybe it could be a gray swan, but one event that impacts output capacity could significantly sway the directionality of WTI.
It only takes one bad event, basically, to push us right back to kind of where we were.
Yeah, correct. I mean, I think, a lot of the analysts were wrong. I mean, myself included, I was saying that we could see $100, right, a couple of weeks ago.
Yep.
We didn't see that. Thank God for everybody filling up their beloved gas-guzzling cars.
That's what I'm thinking about now is that, there's a lot of people who look at the commodity moves and they go, this is all deflationary, it's classic pre-recession. But it just seems like that's a bit of a stretch when we have everything skewed by COVID.
Right.
To where I'm tempted to look at the crude oil move and go, all right, yeah, maybe it is disinflationary or whatever, but it's not necessarily recessionary if that's going to help people in a way. If people were bracing for $100 crude, the airlines were bracing for $100 crude. I mean, we literally saw companies talking about trying to shift their models around to expect crude to go higher. Now that we're not there, a little dose of stimulus maybe. Am I crazy?
No, I don't think you're wrong, and I think that was a big part of what we saw helping buoy the bull run of last week, right? Was the energy markets cooling. Bad for energy stocks, good for the broader market, right? Cheaper oil and gas is generally good for industry and most companies.
Yep.
But I think it's a question of whether or not you can look at what's going on now against historical patterns and draw inferences that things, when it comes to energy, that things will continue as they have historically. I think the answer is no. There's just too much going on that does not fit the historical fact pattern. Emergence from COVID, to your point, significant conflict in areas that do have impact on oil production, the state of certain détente between Russia and other places, oil producers that don't necessarily like our country very much. So I think it's really hard to look historically and say, well, when you get to this point in a monetary cycle, markets see that the Fed is done hiking, might start to look to when the Fed might actually start cutting. Commodities, softs, as well as oil and gas does tend to spike. You have that comes back, pushes on the other side of the rope. I think we saw that happen already. And I think if you look at how the futures are pricing in, as we said before, where the Fed is in terms of cuts, I think that ship has sort of sailed. And now these markets are driven by those sort of unique things that are present now that you can't necessarily put on a historical chart.
I think you're kind of onto something there, actually. I don't hear a lot of talk about, which is connecting the commodity move with the market's pricing of that dovish pivot in June. Because it seems like if one were to argue that bonds are rallying after Powell or whatever because of the way the market's pricing out the Fed's path next year, and then we can say maybe stocks, the risk-on move has been happening because of that. The crude part doesn't really fit to it, to your point, because it should be responding in such a way. So it does kind of conflict a little bit with this message of like a, market pricing in of some big monetary shift.
Yeah, I think that's exactly right. And again, I think it's because there's so many other things that are impacting energy prices.
Yep.
But look, I hope for equities, particularly against the backdrop of the rest of the setup that we discussed in the beginning of the segment, right? The cash on the sidelines, the tax loss selling over, the window dressing coming, the cyclical positive nature of the last 2 months of the year, that we are setting up for what should be. I'm not talking double digits, Oliver. I think we could be seeing low single digits going into the end of the year. But if everything sort of stays calm, we don't get any wacky comments from Fed governors, and there's lots of, miscellaneous Fed speak between now and the next FOMC. But I don't think that we're going to get anything that's going to freak the markets out.
It seems like, as far as the Fed speak goes, they're pretty well choreographed around the same message. What about the earnings potential? Is there any landline in earnings, maybe around NVIDIA, maybe around the cloud stuff? A lot of those companies that still don't make money, exception being a stock like Datadog this morning, a good number. The market goes 25% higher because that's such a rarity in its category. But how do you feel about the next couple of weeks of the corporate reports as part of that thesis?
Yeah, look, I don't see any major time bombs in the next couple of weeks. Of course, given that we
Yep.
do not have
Almost there.
any significant announcements coming out or major economic data. The focus will be on earnings, right? Which I think is probably a good thing for equities. I don't see any major landmines in the offing. The earnings season going by and large better, certainly a little bit better than I expected. I was expecting even more sanguine talk in terms of guidance for lower consumer demand going into the holiday season, people tightening their belts, credit card levels. I know we talk about that till the cows come home, right? The consumer just doesn't seem to care. They're continuing
Still got a job.
They still got a job. You've got wage inflation happening right now, right? We had that pivot from stagflation to parity to wage inflation going on right now. Folks seeing their net worth as reflected by the value of their home. Of course, that's not liquid capital, but still feeling good about how they are in the overall economic picture. So I don't see any significant landmines between now and the end of earnings season. We're, of course, rounding third base, but that's what we're going to be talking about for the next couple of weeks for sure.
Great chat, Mark. Good stuff.
Always good to see you,
Put
sir.
some good stuff on our radar there. I like the connection between crude and the Fed. Mark Lopresti, co-founder at Battle Fed. Speaking of earnings, we got three very different ones to get into the technicals for when we come back. Roblox is trying to recover after its last report. Under Armour is always trying to recover. Stick around. Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth
on
management,
ZO.
advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Renham.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network. Download the Schwab Network app and join in on the latest market trends. Available anytime, anywhere, on any device for free. Schwab Network.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Let's get into some charts and talk some earnings. Renita Young and Kevin Green with us, the Chart Master team this morning. Let's start with the roadblocks here. Renita, last earnings did not go so well for this company.
No, they didn't. In fact, we saw a gap down during the last earnings call. And right now, we see that analysts actually expect to see some sort of a user and developer growth into this quarter. They're looking for strength in daily user engagement levels as well on the platform that they hope to carry over from last quarter. But the adjusted losses are expected to widen from last quarter and widen from last year to 52 cents a share. That would be around a 4% drop year over year. The revenue is expected to see about an 18% increase, however, year over year to $828.84 million. The streak stock has been extremely volatile. As I said, it saw that gap down after reporting earnings last quarter. But here's the kicker. This stock is still up about 20% year to date. So perhaps something is working. We'll find out if they can figure out a good mix for this earnings report.
Okay. Yeah, not short of challenges for this company, given some of the cool off of the activity on the platform, but still tons of people on it and still very popular, of course. Chart wise, how do we deal with that big gap from the last earnings, Kevin?
Yeah, this will actually be a challenge when you're looking at that gap between 32.5 and 36.60. Really testing that gap before the earnings announcement in itself is something that we don't really see that often. Usually we may touch the upper end of the or the bottom end of that gap, and then once we have earnings, that's when the market will then confirm and then try to push through. So this is going to be a very interesting test to say the least. Now, this stock actually does like to trade in a range. We see that at point A from basically January to July of this year. It was trading at a very wide range, but then we did see that drop, that gap that we've been talking about. Now, point B, once again, a consolidation type of channel, more even, but now we are seeing a breakout to the upside here. You want to be able to see a break through $36.60. If it does not, we could see the test of that lower end of that range again, $32.50. But last but not least, we do have RSI. It is approaching overbought levels at this point, so it does have a little bit of a bearish signal that is being accompanied by this. But once again, this is because of the rapid move over the last couple of sessions. I think where the earnings announcement is really going to confirm either we're going to break out to the upside here or we're going to break down.
Approaching London close. About 20 minutes left to go.
What do we call it? The no man's land, the kind of in between. You know, it's like there's still a good bit of volume here. You can see from the volume profile because we've been hanging out here for the last couple of days, and we did trade here a little bit a year ago. But it's just an awkward situation, stuck in the middle of the gap. Is there a lot of like precedent for stocks establishing a new range within there, or do we need to close it out first?
Usually we would not see a range within that gap because volume is still relatively low compared to what we've seen over the last year. So the market's going to really want to get to an area that has a traditionally larger volume, which is why we would say a break up to the upside here by that previous channel at point A, or we break back down to the lower end where we have a little bit more volume. Right now, this is kind of no man's land like you're kind of talking about. So we're really trying to figure out if bulls are going to be in this market to really push it up, or if we're going to start seeing short sellers coming back in trying to knock it down. I would not suspect that we would stay in this range for that much longer, especially with an earnings announcement at the end of the day.
Okay. All right. Really interesting one for sure. All right. Roblox right now stuck in the middle of the gap. That's a fun setup for an earnings. Tomorrow morning, though, so we got to wait a little bit. Let's talk Under Armour, Renita. What's the story here going into this one? I mean, it's just like always at 52-week lows, it seems, or near them.
Yeah, it's a tough operating landscape for this stock for sure. It's been dealing with inflationary pressures, of course, everything else that has been hammering the consumer currency fluctuations as well, not in the company's favor, as well as weak margins. And that's due to increased promotions and an unfavorable mix. Yet, analysts expect the bottom line to increase, however, just by around 5% year over year. We're looking for earnings to rise by 1 penny from a year ago to 21 cents a share. There's expected to be a decline in the top line from a year ago. We're looking at revenue to drop about 0.5% year over year to $1.57 billion. Now, this stock, it's been on a huge slide down, as you referenced, since that huge gap down after its February earnings report. Now, it's currently trading around $1 or so off of its lowest lows of the year, but it's down more than 28% year to date. However, on the upside, this company has placed a premium on strengthening the brand through enhanced customer connections. They want to have effective innovations. They want to have better price points as well. And they've been putting a lot more energy into their loyalty program. That is new for now. So, and you can't forget about as well, the company has a new headquarters in South Baltimore that it's building. That's going through several changes over the past 8 years. It says since the company has downsized, and you can imagine they've tried to make things a lot more affordable when it comes to this new headquarters as well.
Interesting. All right. So they're trying to make it easier on themselves by bringing the supply chain in a little closer to home and maybe kind of get that margin to improve over time. It's just some of that takes investment and CapEx, and I feel like the market's not crazy about that for Under Armour. $6.29, which is the low from earlier or last month. Basically the low from last year too, Kevin. I mean, we've been here many times in this stock.
Yeah, this stock here. It is,
See if we get a decent little
unfortunately, it's a
pullback
little boring here, Oliver,
by
because
the
we have actually
London
seen
close
this
and
stock actually trading in a range
15
between
minutes
May
or
10th
so.
and September 19th. That's that channel at point A. And what I did is I actually extended that channel out. And if you look on the left-hand side, I have it circled twice here. You can see at that upper end of that channel actually acted as an area of support on March 14th and November 9th of last year. So if we continue to extend that out to the right here, you can kind of see the same type of reaction that is happening with the stock. It's breaking through the lower end of the channel. It's trying to retest that right now. But if we do not receive any type of good news, we could see this reset to the downside, and that lower end of that channel becomes resistance, and we might form a new channel that the stock could actually trade in for another 4 months, 5 months, unfortunately here. Now, point B, we are actually seeing CCI in an uptrend making higher lows. This is actually bullish for the near term, but also, once again, a little bit predictable because the range has been very small relative to what we have seen in the past. And then last but not least, we have point C, and this is probably the only bullish signal that I have for this stock, is that the MACD did actually cross over the zero line, also having that 12 EMA crossing above the 26 EMA. That is bullish. Overall, that is bullish. I would say hold off on having a bullish or bearish take for the long term because the primary trend is still down, but you can make a constructive setup that we might see a near-term pop here in the next week or 2 weeks.
All right, it's kind of hopeful here. A little momentum on that second panel, kind of building there in the short term. It's interesting because you would never think it from the price action. But I guess, the rate of change matters a good bit. So maybe trying to improve, bottom out. All right, some hope for Under Armour. Last one on the list, old Kellogg, now Kellanova, which is, I don't think I've talked about the stock since they did this split, frankly, on any of my shows. So I have to say, for the debut discussion, this name is ridiculous.
They say that the Nova part of it represents this new birth that it has and how it wants to do something new in the next 100 or so years of the company. But this is the first earnings report since the company split into two separate entities. WK Kellogg is with cereals, and then Kellanova focuses on the snacks. And we'll find out in this earnings report if we see any indication that Ozempic has been out to attack snacks by curbing people's snack intake and their desire to do it. We saw reports about this over the past month or so, but we'll find out if this is actually showing up in the numbers or if Kellanova wants to blame that on its lower numbers if they see lower numbers or slower growth. But adjusted earnings is expected to decline around 10% year over
15
year
minutes to
to
go
91
to
cents a
London
share. Revenue is
close.
expected to see a modest increase, $4.02 billion, but this stock has been hammered. It's down around 28% year to date, trading pretty close to its lows right now.
Yeah, it's obviously got hit with a bunch of the other sweet snack, salty stuff, but I guess the Nova part can be their saving grace, perhaps. Okay, the rebirth. Which does the chart look more like, the K or the L?
If we don't get this pullback for the London close, we're probably going to see it towards the end of the day, between 230 and 350.
Point A is going to be that gap down from September 29th here. So that gap down from $59 to $56, that was on large volume. That showed that long stockholders did sell. That's going to be a key area of resistance that I'm keeping in mind here. Now we have also point B, where we have the RSI in this really long-term downtrend since May 1st of this year. It's not surprising that the stock has also complemented that move. We are seeing a little bit of an uptrend here in the short term that has actually broken that long-term or that primary downtrend for the RSI. That is actually bullish in the near term, and we are seeing these up moves in the stock over the last couple of sessions. It's been on increasing volume on each and every day, so that's once again bullish. Once again, volume is going to be key. October 12th, we actually did see this blowout candle, and that's what I call it. People call it a reversal, but I call it a blowout because when you see this reversal candle on top of large volume, it means that some short sellers may have gotten blown out of their positions, and some long buyers actually came in because they thought that the stock was oversold. So that's going to be a key area to be able to recognize here that we could be in for a little bit of a short, short covering type of trend. I'm not sure if it's going to be long term. Last thing I will note, it's not on the chart here. Kellogg and Kellanova now actually have trades really, really hand in hand when you're looking at grain prices like wheat and oats. So we are seeing those also compressed right now. You would think it would be the opposite because their cost of goods would go down and that would increase their margins, but they're also able to increase prices as commodity prices increase. So we have seen those commodities come down. Not surprised we're seeing Kellanova going down as well.
All right. Okay. A little bit of hope in some of these here on the very, very short term. So they get a chance to turn it around. Under Armour and Kellanova. Thanks, Kevin Green. Thanks, Renita Young. Let's talk some more stock moves with Caroline Woods back with me here for a look at Planet Fitness. Up 13%. Pretty good growth projection here from Planet Fitness.
Yeah, Planet Fitness really pulling through with these results. Beat on both the top and bottom line. Also raised its full year outlook, and that's what's sending shares higher. Although this was a stock that got pretty beaten down so far this year. So still negative year to date, but adjusted EPS of 59 cents. Tops analyst expectations by about 4 cents per share. Revenue rose about 14% to $277.6 million. The expectation was for around 267 there. Same-store sales rose 8.4% in line with consensus. The gym operator ended the quarter with 18.5 million members, actually added 110,000 in the quarter. They said that they're seeing their strongest member growth with the Gen Z category. And now for 2023, Planet Fitness says it expects revenue to grow 14%. Previously, that was up 12% year over year. And adjusted EPS to grow 35%, up from 34%. Keeping its same-store sales outlook intact, that's projecting high single-digit percentage range for same-store sales growth. And revised its outlook for new store openings to be between 150 and 160. The previous guidance was for 160, so that could get notched down by about 10. They're continuing to search for a permanent CEO, and also there was talk on the call about a potential price increase. Of course, Planet Fitness is known for those ultra low-cost gym memberships. I haven't been a member there in years and years, but I'm pretty sure I paid $10, and apparently they said we're proud that we haven't raised a $10 classic card price in 30 years. So they did say, however, consumer expectations on price have changed in a highly inflationary world. We're exploring whether we have an opportunity to take our price basically higher without sacrificing member growth. But then the CFO came out and said our criteria is we don't want to sacrifice member growth. So they're doing some testing around there.
People to what they're paying in case they forgot about it. Only Tim, it's like the opposite of what Netflix was, where people were like cross-using accounts. In their case, they're like slipping under the radar. People don't like notice their $10 bill if they stop going.
Yeah, or they go once and then they're like, well, I might as well keep it. You know, next week, next month. I'm the type that I look pretty closely at the line items. So.
I'm not as good at that. All right, so they raised the same-store sales and the total growth to double digits. So the comps are high single digit, total growth double digit, and then profit growth too, upwards of like 20%. They say they're going to grow for everything for the fiscal year.
So same-store sales growth they kept intact. That's high single-digit percentage range. So they are still expecting growth though, and I think that's pretty important. And compared to last year and also compared to 2019 levels, they're in a better position. So it hasn't necessarily been reflected in the stock price up until now, but definitely making up for it today with shares up about 13% on this news.
4,400.
Yeah, big rally here. And making up the lost ground from the big sell-off in September. All right. Thanks, Caroline, for the update. A lot of companies here on the move. Let's bring in our team for a little market meetup. Nick Theodorakis, Dan Grant, Nick's Financial Risk Management Director, Charles Schwab, and Dan's Senior Specialist Retail Trade. Miss you guys in the office. All right, Nick, get us started here. NASDAQ is trying to do basically all the work for the market here. No surprise. What does that mean? I mean, it's up 1%, trying to rip up to October highs, really challenging some interesting levels, the Qs.
Pretty fascinating, right? You know, we got sort of more negative inflationary talk this morning, Oliver, right? Talking about Kashkari saying maybe inflation and rate hikes aren't done, and I think that's a fascinating story to see tech doing so well. So not taking his words too seriously, I suppose, on potential kickoff of the Fed speak and higher rates still. But I suppose, looking at the setup of the markets here, VIX is really trending lower, even though things are kind of sideways overall market. The unknowns are becoming known, right? We're not seeing sort of this speak of much higher rates, and I've been saying it for a while. I guess the story here is just that if we're able to sort of understand the funding environment for tech and other sectors, that we're going to be able to position around that, and it can be constructive for equities overall. Not a ton of data this week, so we just have to probably hang on every Fed
Yeah,
speaker
at this
here.
point, it looks like it'll be the for the
I
afternoon.
think it's a
Yeah.
bit of an interesting divergence to see tech up, leading the way so much. And I suppose it goes back to sort of the strength and balance sheet and the mega cap names kind of being the safe haven when the rest is a little bit uncertain still. So more to come, I think, on the talk. Certainly Powell will be the biggest on the week to me. But I think hearing that other Fed governors aren't really set on being done with rate hikes is going to sort of keep this market in check as we go forward on the week.
All right. Bonds rallying, Dan. I know you're watching that. Seems like the bid there is pretty real.
Yeah, a real bond market rally. So it's not just a short bid. We're like last week we were down at 109.15 was the low of the move for October in 30-year bond prices, all the way up to 119.03 on Friday when we got our unemployment number. That's what Goolsby's referring to. Well, now the Fed can relax a little bit. They don't need to go hard as a hammer later in the year. But yeah, 7 points off the low. And this is in the face of the zero chance the Fed's going to raise rates, like close to zero. And we have an unsated demand, is what one piece I read about, demand for treasuries, right, for T-bills specifically. Since June 1st, the treasuries issued 1.76 trillion worth of T-bills, and investors can't get them fast enough.
Yeah. Where does it start to get like real reversal territory, Dan? Looking at the 10-year chart, I mean,
we're inverting, right? I mean, the curve's going back to full inversion. I mean, the full inversion it could play out again, right? So if the Fed is, has the Goldilocks where they don't need to hammer the rates anymore bring rates up higher, and they're taking away the Fed rates cuts. At the end of next year, they were probably trying to price in rate cuts again. That's not happening now. Right, I just don't see it. I still think this is it feels like a short bid in the bonds. The stock market seems like a real bid right here, but we're going into the, last month of the year when we're adjusting portfolios. So
the irony is that as the stock market, I guess it's not the irony. We've been doing this for a while, but the yield curve flattening the last few days. Throughout this rally, if we believe that that's a sign of negative economic implications, then it still seems like maybe there's that catch-22 to some degree, Nick.
Yeah, I mean, it's going to be really hard if Dan's right, and we go back to full inversion for the financials to do well. And then I still think there's this sort of, we're not necessarily landing the plane at this point in time, right? We're still not at that soft landing kind of point, right? And what does that really look like? That's not going to be one point in time. Are we slowly, seeing this equity rally, and that's going to grind on,
5
and
minutes
the curve
to
will
London
normalize?
close,
Okay, then I think you end up in that scenario. But if we really go back to full inversion and we see more financial institutions struggle, we see cost of funding just stay high for a long time. Yeah, and then you factor in other things like taxes are going up, right? We got reassessed here in Chicago. If we were talking about it offset, there's this other kind of student loans are coming back online. There's other drains on income that I think if we're not careful could sort of sneak up and not be represented in these inflationary numbers and lead us more towards a kind of a soft recession as opposed to just this nice soft landing.
Okay. Seems like the odds of that are going to depend maybe on how this week's data come in. Do they get exciting? So far, it's pretty dull, though. So earnings kind of remain our focus, and the market seems to have a little gumption for some upside here this morning. NASDAQ now higher by 1%. Thanks, Nick Theodorakis, Dan Grant. Thank you for watching MTL Trading 360 with Nicole Petalese coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in
3
one
minutes for London
Moving funds
close.
between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds.
Oh, now I can.
Get more with Schwab Bank Investor Checking,
You're
the checking account built for investors.
Ugh.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Get each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
2 minutes to go.
Welcome to Schwab Network,
Daily live exclusive content tailored for today's investors.
broadcasting 24/7 from our studios in Chicago.
And from the heart of Wall Street at the New York Stock Exchange.
Up-to-the-minute market insights,
Example trades and stock-specific analysis featuring the smartest minds in the business.
no politics,
No noise.
analysis ahead of the biggest events for the economy.
From bell to bell and beyond.
Watch live
And on demand.
24/7, 7 days a week on SchwabNetwork.com.
All right, ladies and gentlemen, that's gonna be it for me.
Available anytime, anywhere,
Top of the candle, yeah. So let's see if this candle closes red or if the following candle follows through. But I'll be watching to see if we can close below 41.91 or 41.90 for a potential reshort. So that's it for me. I'll be back later on this afternoon. So I'll catch you guys later. If you're up on a day, stay green. Don't overtrade. All right, bro. See you tomorrow.
He's out, Poppy. I'm Jenny Ford. Join us for Next Gen Investing.
1 p.m. Eastern, only